Well, welcome back to Business Talk here on businesstech.co.za. It's Christmas around the corner. It's also medical aid increase season. And Deon Kotze joins me now. He's the Chief Commercial Officer at Discovery Health to unpack the scheme's 2026 contribution adjustments and their new member offerings. Now, Discovery Health Medical Scheme has announced a weighted average increase of 7.2% with a deferment of those increases to April next year. And I think it's a move that's already a lot of people talking, from policyholders to the broader healthcare industry, especially as we see household budgets remaining tight and medical inflation keeping climbing. So, Deon, great to have you on. Let's just start with that headline figure, 7.2%. I mean, yes, it is higher than inflation, but at least not double digits. So you're balancing scheme sustainability with affordability for members in what's still a very tough economic climate. Walk us through the process and the main factors you weigh when deciding on such an increase.
Yeah, thanks for the opportunity. I think it's important for people to understand it's a bit like a budgeting process. Effectively the scheme um, kind of has to work out how much claims it's going to pay in 2026. And once it's worked out how much claims it's going to pay in 2026, that determines how much contributions it has to collect, because obviously claims are paid from members claims are paid from members' contributions. So in determining what the contribution increase is, effectively that reflects what the expected increase in the claims is, or what the claims budget in 2026 looks like. So that 7.2% increase is effectively what the scheme is expecting claims to increase by in 2026 relative to 2025. So that's kind of the process at a very simplistic level of how the contribution increases are set. It's really a reflection of the expected increase in the claims. So what drives that increase in the claims is two components. The first one being, what is the price of a healthcare service? So prices of goods go up year on year. Healthcare is no exception. So the price of a GP consultation, the price of a night in hospital, the price of prescription medicine, all of that increases year on year. Typically, those increases are around the consumer price index. So whatever kind of that consumer price index is informs what the price of healthcare services will go up by. The balance between that and the 7.2% is attributed to what is referred to as utilization in healthcare. Effectively, what that means is, apart from the price of a GP consultation going up, we also expect more people to claim for GP consultations. So the claims cost reflect both. It reflects the increase in the cost of the GP consultation, or the price of healthcare. It also reflects the increase in the utilization of the GP consultation. So more people claiming for more healthcare services. So an obvious question to ask is, why do people claim more? Well, it's a function of aging, or as you get older, you tend to use healthcare more often, or if you're diagnosed with a chronic illness, you have to get medicine or treatment for it more often. So those are the factors that drive that increase in utilization. But I hope that gives kind of the sense of what drives that increase in the contributions.
Well, it certainly does. And I think, one thing broadly that the entire medical scheme industry is battling with is that base of the pyramid, attracting new, younger members. And so as people age and that profile increases, you will start to see an increase in claims. And we can go down the least cost benefit rabbit hole. But I want to park that for one moment. I think one of the more striking announcements is that Discovery Health will again defer contribution increases, this time until April of next year, really reminiscent of those relief measures during COVID, when Discovery also offered members breathing room. How is the scheme able to do this without compromising that financial stability that you spoke of? And what does this mean for members over the long term?
Yeah, so I guess, it's linked to, but slightly separate from kind of the increase in the contributions. I mean, the critical thing is that whatever the contributions that are collected at the level at which they collected must reflect the level that we expect the claims at being. But the reality is that the scheme holds members' funds in reserve. There's a regulated minimum of reserves that the scheme has to keep. It's defined in regulations. It's 25% of whatever the gross contribution income in a particular year is. So that's the minimum, is the 25%. The scheme is in a very healthy financial position with that proportion of contributions being held in reserve sitting at 30%, which means that the scheme is actually in a position that it can, for lack of a better word, fund the contribution increase for part of the year. So effectively, members can keep paying 2025 contributions, although they're already kind of getting their 2026 contributions, because the scheme has enough money in the bank to pay the difference for 3 months of the year. And that's where the deferral then comes in. And once that sort of benefit runs out, so once that kind of money set aside in order to fund that difference, that kind of is expected to last up until the 1st of April. At that point, we would then have to increase the contributions then. But effectively, it's as a result of members' reserves exceeding kind of the minimum requirements that the scheme has to hold, and that financial strength allows the scheme then to defer the contribution increase.
Yeah, it does. It suggests that confidence in your reserve levels and your risk pool as well, allowing you the ability to give that kind of short-term relief, which in this environment, I think is very welcome. Let's move beyond the rands and cents conversation, because we know Discovery Health is a leader when it comes to innovating in the healthcare sector. Next year looks no different. What are some of the new benefits, digital tools, or care enhancements that members can look forward to next year?
Yeah. I think the first point that I do want to make is, despite kind of like the innovation and the new things, what is important is that we maintain benefits for members in real terms. So any benefits that have a limit or a threshold attached to it, those would increase, and those would increase on the 1st of January. So members' benefits are maintained in real terms. There are a few exceptions where the benefit limits or thresholds are already at a level which can sustain the benefits for members. But in general, the principle is that members' existing benefits increase. Then, of course, the scheme and actually kind of members expected does invest in new benefits. A big enhancement that we made for members at the beginning of this year is the launch of what we call personal health pathways. So for members that know it, on the Discovery Health app, you can register for personal health pathways. It provides you with personalized recommendations in terms of what I could do to improve my health or maintain my health. And in addition to that recommendation, we also fund the recommendation, and we give you a reward for responding to the recommendation. One of those rewards is what we call the Personal Health Fund. So it's a completely new benefit that we created for 2025. And that is that if you complete one of these actions, you earn money into this Personal Health Fund, which you can use for healthcare. To date, the scheme's allocated more than 200 million rand into members' personal health funds, of which they've used nearly 90% on relevant healthcare services. That personal health fund is being enhanced for 2026 because of what we see it drives in terms of healthy engagement by members, kind of members seeing that as a good incentive for them to engage in their health and in actions that improve and maintain their health. So members can earn an opening balance on the 1st of January 2026 in recognition of the things that they've done to improve their health in 2025. We've also increased the amount that they can earn during the course of the year into their personal health fund. And we've also allowed them to earn money over and above that through what we call challenges in personal health pathways. Now, challenges in personal health pathways has the intention of helping members to build healthy habits. So maybe this year was the first time that you actually got off the couch and went for a run. The challenge is now to kind of do that consistently and actually make it a habit, kind of make it part of your lifestyle. That's what challenges are about. And that challenge is so valuable in terms of your long-term health. It's so valuable to the scheme in terms of, that generated healthcare spend being lower in the longer term, that we can put quite a valuable benefit to that. So members can earn up to 1,500 Rand for completing one of these challenges in their personal health fund. So that's one of the major enhancements that we've made for 2026.
And I think it's just a great example of something that really was pioneered by Discovery. You look at using behavioral economics to nudge us to make better decisions for our healthcare. it's shared value, because it means then, if we focus on more the preventative side and we're getting off the couch, we're running a bit more, we'll be a bit healthier. It's good for us. It means we claim less. It's good for the scheme, which means it's good for everyone, because it means you can keep a lid on prices. So it's really fantastic to see you continue to innovate. You've also announced some new plan options for next year, I see, Deon, including the Smart Saver series, and no increase at all for members on the active smart plan. I mean, that's quite significant. What gaps are those plans designed to fill, and how do they reflect the kind of shifting needs and the behaviors as you look at the data of your member base?
Yeah. I mean, Michael, this is interesting. I mean, we know kind of like if you're 25 years old, like, and you're looking at your budget, the last thing that you actually want to spend it on is a medical scheme contribution. It's just not something that you prioritize relative to everything else that you really want to be doing with your hard earned cash. And so we do see an under relative to the distribution of the population by age, we do see a relative underrepresentation of younger ages inside the medical scheme. And often it is because they don't see the value of the medical scheme membership, or the medical scheme plan and benefits don't really speak to their specific needs. So at the beginning of this year, we launched a plan called Active Smart. It was very much focused on that generation, that sort of gap that we see in medical scheme membership, which is young people finishing varsity, starting a job for the first time. So the benefits are built around their needs. In the main, kind of like what happens if, I'm in an accident and I need very expensive hospitalization. So kind of it's full hospitalization in a network. And then all the other things that are kind of relevant day to day, being able to visit a GP, cover for a sports injury, cover for my medicine. So that plan has exceeded our expectations in terms of its growth. It costs 1,350 Rand per month for those benefits and more that I've mentioned already. And we're seeing more than 80% of people joining that plan are below the age of 40. So it's kind of hitting that sort of sweet spot that we were looking for. So the growth has exceeded our expectations. The profile of the members that are joining exceeded our expectations. It's so good for the scheme, and in particular in the long-term sustainability, that the scheme can afford to keep those contributions unchanged. So those members will continue to pay 1,350 Rand in 2026, and members joining will join at that price point then. So there's no increase for those members. Now, in the same vein that we looked at sort of that gap in terms of the medical scheme membership, we also looked at young families then. So, families where the parents are below the age of 40, we see a similar underrepresentation of those families in the medical schemes. And when we looked at their needs, then it was clear that apart from the fact that there are contribution options for them, so there are price points that meet kind of their needs, their affordability needs, but the benefits maybe don't kind of represent real value. So we redesigned kind of like the benefits at those price points in order to reflect their needs. And so it focuses on, again, unlimited hospitalization in a network hospital, because that's what young families are already kind of very worried about. Secondly, guaranteed benefits for the things that they know will happen during the course of the year. I mean, 94% of those young families go to the pharmacy and claim for medicine during the course of the year. 90% of them end up with a GP during the course of the year. So you don't want to worry about, like, do I have money in the MSA or not? We're just guaranteeing that if you need to see the GP, if you need to get prescription medicine, there's a risk benefit available for that. And then the MSA is then for everything else. Whatever kind of like the family needs to prioritize during the course of the year, there's flexible benefits for that through the medical savings account, and of course then through the personal health fund. And those price points were designed with those young families in mind, and I think offers real value to families that have perhaps deprioritized their cover, or maybe are looking for better value given what they're paying for inside the medical scheme. And that's kind of really intention with the Smart Saver options then.
And I- what you've been able to develop sounds almost, like you're competing with those who may have had a hospital plan, but there's nothing else outside of it. And this now, really gives you all of those other benefits apart from just insuring for that worst case scenario. If you're in a hospital and you've got to fork out R1 million, for example, which can absolutely ruin people. We know that the market is fiercely competitive, as I said earlier. The industry would be able to better compete, given that it's got to offer prescribed minimum benefits, if it had the least cost benefit options. And we know the regulator has been sitting on them. And how long is a piece of string? We don't know when it's finally going to come out and allow you to compete on a level playing field with some of the insurers. Given that, we know members are constantly shopping around, as you said, for value. How do you keep on positioning Discovery Health to ensure that you both retain your existing members and attract new ones into the future?
I mean, I think this is you talk about sort of the incomplete regulation, Michael, and that's a really important point, but that's not something that the medical schemes necessarily can solve by kind of like their benefit changes, etc. And it's important, and we appreciate kind of the engagement that's in the industry around these sort of more macro issues. But that does kind of mean that the medical scheme has to focus on sort of does the benefits represent value for members, right? And so a couple of things there. I guess the first thing is that, I mean, we are laser focused on ensuring that contributions remain as low and as affordable as possible without compromising the long-term sustainability of medical schemes. We don't want a situation like another Health Squared, where the schemes, as a result of kind of underpricing for too long, actually just in the end has to be liquidated because it simply doesn't have the funds to sustain itself. So balancing that affordability with sustainability is of critical importance. But as I mentioned, those contribution increases are based on price and on utilization. So all those investments that we're making in making people healthier, reducing the price of healthcare, those are really with the intention not of just kind of paying less for healthcare or reducing the quality of healthcare. It really is kind of to control that inflationary increase year on year in claims. So that's the first part, is kind of like making sure that we do as much as we can to maintain that price, and to give members the comfort that if you're with Discovery Health Medical Scheme, you can expect those contribution increases to decrease over time. I mean, prices will go up, but you want to kind of make sure that they're not going up on an increasing trend, but rather at a decreasing trend. So that's from a price perspective. The second part is then from a benefit perspective. So, earlier I said that, maintaining benefits in real terms, that's really important. But second, there's a nuanced version to that, which is that you want to make sure that the benefits secure good outcomes for members. So in as much as we focus on the price of healthcare and the utilization of healthcare, we do a lot of work to ensure that what we pay for actually delivers good outcomes. And I say that it's nuanced because perhaps people don't necessarily think about that, but I think at the point where you're sick, really all you want to do is get better and get better quickly, right? And so we're really focused on outcomes as well, so that we don't kind of compromise the quality of the healthcare in the process of managing that affordability. So again, a nuanced version, but it's really important that members understand, we stand for that quality of healthcare. And then I think the recent part is investing in this concept of precision and personalization in healthcare through the personal health pathways. We would love our members to kind of see us less as a funder of their healthcare and more as a partner in their healthcare, especially through personal health pathways and the investment that we're making in it. Kind of showing you, this is how you can improve your health. This is how you can maintain your health. This is how you can unlock value by doing that. And in as much as we're investing in making that visible to members, we're investing in making that visible to the members' doctors. So doctors have the same access. They can see what we're recommending to their patients. They can endorse those. They can endorse those actions. They can use it in terms of the treatment plan that they have for their patients. So it's really around precision and personalization, partnering in our members' healthcare for them to have a healthier future. So all of those are things that perhaps are hard to quantify in terms of the value. But if you kind of take a rational view on your healthcare, I'd like to access healthcare when I need it, and therefore I need to kind of maintain my cover, and therefore the price that I pay for it is really important. When I access healthcare, I want to make sure that it's good quality healthcare, and therefore kind of someone that partners in terms of improving those outcomes over time is really important. And at the same time, I want to live a good, healthy life. I actually don't want to use healthcare. And so a partner that helps you in terms of a partner that helps you kind of like improve and maintain your health is really important. So I think those are the things that we kind of implicitly stand for in terms of broader benefit design.
Well, I mean, as much as you might not want to use it or utilize it, it's an inalienable truth in life. As we age and grow older, we will utilize it more and more. But we can certainly, by following those personal health pathways, stay fitter and healthier for longer. And your health is your wealth at the end of the day. Deon Kotze, thank you very much, Chief Commercial Officer at Discovery Health, for joining us and for giving us a look behind the numbers and under the hood and the strategy for 2026 at Discovery Health Medical Scheme, the largest open scheme in the country and continuing to be the market leader. Thanks for your time.
Thank you.